Today we're looking at a really specific and, I have to say, pretty contrarian analysis report on fuel cell energy. The ticker is FCEL.
Right. And this is a stock that's been all over the place. Everyone saw that huge run up back in December. And then the pretty sharp cool off since.
Yeah, and a lot of people are looking at the price now. It's hovering around $7.58, and they're probably wondering, is the party over? But this report we're digging into, it argues the complete opposite. It's saying this pullback is actually a golden ticket.
A golden ticket into what, though?
Not just a hydrogen play anymore. The report is framing this as a full-on AI power play.
Now, that's a big claim. So our job here is to, cut through the hype and really look at the details. We need to examine this strategic pivot they're talking about.
And does the technology actually make sense for this pivot?
Exactly. And do the financials, the market itself, actually support this super bullish, buy the dip idea? Is FCEL really about to become essential for the AI boom?
All right, let's get into it. The whole thesis starts with a problem that I think a lot of people miss when they're just focused on AI chips and software.
Oh, yeah. The power problem.
The power problem. I mean, everyone is talking about NVIDIA. Their chips are incredible, but they are complete bricks without a massive amount of electricity.
And the grid, our current grid, just can't keep up. It's not built for this kind of power density.
So if you're a big data center operator, your biggest headache isn't finding land or even capital, it's the wait.
The interconnection queue.
Exactly. You're waiting 3, sometimes 5 years for the local utility to upgrade everything so you can just plug in. That's a lifetime in the AI race.
That kind of delay just kills a business model that's built on speed.
Yeah.
And that's the vacuum. That's the opportunity that this report says FCEL is stepping into.
And this wasn't some subtle hint or a vague suggestion in a press release. The shift was explicit.
It came right from the top. The analysis zeroes in on the Q4 2025 earnings call. The CEO, Jason Few, he just came out and said it.
What were his exact words?
He said the company's strategy is now, and I'm quoting, deeply focused on the data center market. I mean, this is not ambiguous. That's a signal that every dollar, every engineer is now pointed in that direction.
So the game is time to power. But what's stopping a data center from just, installing a bunch of natural gas turbines or something? What's FCEL's edge?
It's speed, for sure. They can drop in these microgrids way faster than a utility can build a substation. But the real killer app, as the report calls it, is the efficiency.
The efficiency loop.
Yeah, the efficiency loop. This is where it gets really interesting technically.
Okay, so let's slow down and break this down for everyone. What is actually happening inside their fuel cells that makes them so perfect for a data center?
Okay, so they use something called solid oxide fuel cells, SOFCs. And the key thing to know is that they run hot, really hot. We're talking like up to 1,000 degrees Celsius.
Right. And when they make electricity, they produce a ton of this super hot exhaust gas.
Exactly. And most power plants, they just vent that heat. It's totally wasted energy.
Which is why their efficiency is so low.
Precisely. But data centers have another massive energy problem, don't they?
Cooling. You have to keep all those servers from melting. It takes a monumental amount of energy just for the air conditioning.
And that's the connection. That's the loop. FCEL takes that high-grade waste heat from the fuel cells.
And instead of wasting it,
they pipe it into something called an absorption chiller. Now, these don't use electricity to create cold. They use heat. It drives a thermal cycle that cools the water for the data center's AC system.
So you're getting your electricity and your air conditioning from the same initial fuel source.
You got it. It's combined heat and power, or CHP.
So what does that look like in terms of numbers? I mean, what's the efficiency game that a CFO would actually care about?
The difference is, it's stark. Your standard power from the grid, once you factor in transmission losses and the separate electricity you need for cooling, you're lucky to get maybe 40% total efficiency.
Okay, 40%.
With FCEL's system, because you're using the waste heat for cooling, that overall system efficiency jumps to over 90%.
90. So you're more than doubling the useful work from the same amount of fuel.
Yeah. I mean, that's not just a small improvement. For a tech giant that's planning to use gigawatts of power, that is billions of dollars in saved operating costs. It's a game changer.
Okay, the tech sounds incredible, but can the company actually pull this off? A pivot this huge takes a solid financial backbone. Let's look at the fiscal 2025 report.
Right, because a great idea with no money is just a great idea. The analysis argues they are stable enough to execute. First, look at the growth.
The top line revenue was $158.2 million for the year.
Which is a good number, but the key is the trend. That's a 41% increase year over year.
41% is huge growth.
It is. And Q4 was even better. They were expected to do about $47 million in revenue, and they came in at $55 million. They absolutely crushed it.
So what drove that beat in Q4? Was it data center deals already coming through?
Not directly, no. It was mostly from increased service revenue, which, sounds boring, but it's actually really important.
How so?
It means the systems they've already sold are up and running, and they're generating steady, predictable income. That's the kind of foundation you need before you go chasing a massive new market like this.
Right, you need that recurring revenue. But you also need cash in the bank. This kind of manufacturing is expensive.
They've got about $174 million in unrestricted cash. The analysis calls it a fortified balance sheet. It's the runway they need to go out and win these first big data center contracts.
Okay, let me be the skeptic for a second here. $174 million is a lot of money, but they also posted a pretty big loss, right?
A very big loss. The net loss was negative $191 million.
That's not a small number. How does the report square that with the bullish case?
It contextualizes it. A lot of that loss isn't from, operational failure. It's from huge investments in R&D and scaling up their manufacturing. They're spending money to prepare for this pivot.
So how do you tell the difference between good spending and bad spending?
You look at the gross loss.
Yeah.
And the report makes a big deal of this. The gross loss is getting smaller, a lot smaller.
And that tells you what?
It tells you the core business of actually building and servicing the fuel cells is getting more efficient. The unit economics are improving. So even while they're spending big on the future, the day-to-day operation is getting healthier. The ship is turning.
Okay, that makes sense. They're getting better at what they do, which is what you need before you scale up massively. And the scale of this market opportunity is just mind-boggling.
It really is. Let's talk about the TAM, the total addressable market.
How big is this power crisis, really?
The analysis cites the International Energy Agency, the IEA. Right now, data centers use about 1.5% of all the electricity on the planet.
Which is already an insane amount of power.
It is. But that's not the scary number. The scary number is that the IEA expects that figure to double.
Double. By when?
By the end of 2026.
So in just a couple of years.
We are heading into a full-blown power demand crisis, and the traditional grid just can't be built out fast enough to solve it.
And this creates a huge paradox for the big tech companies, doesn't it? I mean, Amazon, Google, Microsoft, they all have these very public net zero promises.
Very aggressive goals. But at the same time, they have, as the report puts it, a massive power addiction to fuel their AI ambitions. They have to grow, but they promise to be green.
And that's where FCEL claims to be the perfect solution. It's not just about getting power fast, it's about getting cleaner power.
It's a two-part solution, really. First, their fuel cells can capture carbon right at the source, so even running on natural gas, they're cleaner than the alternative.
Okay, so that's the now solution.
Right. And then there's the later solution. The cells are already hydrogen ready. So as soon as green hydrogen becomes widely available, their customers have a clear, built-in path to true net zero.
So you're buying reliable power today with a roadmap to perfect compliance tomorrow. That makes a ton of sense.
The conclusion here is that the TAM isn't just millions, it's billions, potentially tens of billions. It's driven by this dual need for power and sustainability. You can't separate them anymore.
Okay, so the fundamental story is compelling. The tech is smart, the pivot is clear, the market is huge. But what about for someone looking at the stock right now? Is this the moment? Let's get into the technicals, the buy zone.
Yeah, you have to look at the chart. We saw that crazy spike to almost $9.70 in December.
Followed by the pullback. It's been consolidating around that 750, 760 mark.
And that cooling off period is important. The analysis identifies $7.50 as a major support level.
What does that mean, a support level?
It's a price where historically a lot of buying has come in and stopped the stock from falling further.
Yeah.
So the stock isn't just drifting down randomly, it's landed on a historical floor. For a trader, that gives you a very clear line in the sand.
And the report talks about a bull flag pattern and the RSI resetting. Can you break that down for us?
Sure. A bull flag is just a chart pattern. You get a sharp vertical move up, that's the flagpole. Then you get a period of slight downward consolidation, that's the flag. It's considered a healthy pause before the next move up.
So it's the stock catching its breath.
Exactly. And the RSI, the Relative Strength Index, that's a momentum indicator, it got way overbought during that December spike, meaning the buying was too frantic. The recent pullback has let that RSI reset to a neutral level.
So the engine has cooled down and is ready to go again.
That's the idea. It means the setup is there for another move higher without being immediately exhausted.
So what does this all mean for the risk versus the reward at this price?
Well, the analysis says the ratio is fantastic. The risk is very defined. If the stock breaks below 750 and stays there, the setup is busted. But if it holds, the potential reward is a move back toward $9 and then eventually up toward the highest analyst price target, which is around $12. So you're risking a little to potentially make a lot.
Okay, let's wrap this all up. We've taken a deep dive into this analysis, and the bullish case seems to stand on three legs.
Right. You have the technology, the SOFC with combined heat and power, which is uniquely suited for the problem.
Then you have the strategic pivot, which is crystal clear and coming from the very top of the company.
And finally, you have the current stock chart, which offers what the analysis calls a very appealing entry point from a risk-reward perspective.
The big picture here is that the AI revolution needs an engine room. It needs power. And this report argues FCEL is positioning itself to be that essential, high-efficiency engine.
The demand is not optional. You can't build the future of AI on an aging grid that takes 5 years to upgrade. It's a fundamental mismatch.
So for you, listening to this and tracking the story, what's the one thing to watch? The analysis keeps coming back to one number.
That $7.50 level. Watch it closely. If the stock can build a base there and hold it, the report suggests the bulls are still very much in charge of this story.
And the final thought to leave you with is this. This AI power crisis is just getting started. So who else is out there? What other, maybe overlooked industrial or clean energy company is sitting on a piece of technology that, with one smart pivot, could suddenly become a critical supplier to the biggest technological shift of our generation? That's where the next big opportunity might be hiding.